In August 2018, with a single sentence typed into a phone, tens of billions of dollars shifted, not in a bank vault, not in a boardroom, but across Wall Street screens, instantly. Am considering taking Tesla private at $420, funding secured. Within minutes, traders froze, hedge funds panicked, short sellers scrambled, because this wasn't just a tweet. It was a declaration of war, a war between Elon Musk and the most powerful betting machine on Earth, Wall Street. This is the story of how some of the smartest investors in America bet against Elon Musk, and how that bet nearly destroyed him or made him unstoppable. To understand this war, you need to understand one thing. Short sellers don't build companies. They don't invent products. They don't dream about the future. They bet on failure. A short seller borrows a stock, sells it, and hopes the company collapses so they can buy it back cheaper. When they're right, they look brilliant. When they're wrong, they lose everything. Short selling has exposed frauds before, but it has also crushed innovators. And no company in modern history attracted short sellers like Tesla. By the mid-2000s, Tesla wasn't just a car company. It was an idea. Electric cars replacing gas, software replacing engines, Silicon Valley invading Detroit. Wall Street hated that idea. Tesla burned cash, missed deadlines, lost money year after year. Short sellers saw weakness. They called Tesla overhyped, overvalued, and over. Some said it was the next Enron. Others said it was a cult. At one point, Tesla became the most shorted stock in the entire U.S. market. Billions of dollars were placed on one belief: Elon Musk will fail. But Elon Musk was not a normal CEO. He didn't speak like Wall Street. He didn't dress like Wall Street. And he didn't think like Wall Street. While analysts focused on quarterly profits, Musk talked about Mars. While investors wanted predictability, Musk thrived on chaos. He slept on factory floors, pushed engineers past limits, ignored PR advice. And when short sellers attacked Tesla publicly, Elon didn't stay silent. He took it personally, very personally. By 2017 and 2018, the pressure became unbearable. Production problems, relentless media criticism, and a stock market that seemed to root for Tesla's collapse. Short sellers amplified every delay, every missed target, every crack in the story. Online, they mocked Musk. On TV, they predicted bankruptcy. Behind the scenes, Elon was exhausted. Friends said he was barely sleeping. Executives were leaving. Factories were behind schedule. This wasn't just about money anymore. This was about survival. Then came the tweet. August 7th, 2018. Am considering taking Tesla private at $420. Funding secured. In seconds, Tesla stock exploded upward. Short sellers lost billions. Regulators noticed. Wall Street didn't see a joke. They saw market manipulation. Within days, the U.S. Securities and Exchange Commission launched an investigation. What Elon thought was a message of confidence, Wall Street saw as chaos. And now, the war had a referee. Elon Musk believed short sellers were trying to destroy his life's work. Short sellers believed Elon Musk was lying to the market. Both sides were convinced they were right. And now, the U.S. government was watching. Wall Street fights are usually quiet. Numbers move, positions shift, fortunes change. But this one got loud, very loud. Within weeks of the tweet, the U.S. Securities and Exchange Commission stepped in. Their accusation was simple and dangerous: that Elon Musk had misled investors, that funding secured wasn't secured, that a single tweet had distorted the market. For the SEC, this wasn't about Elon's vision. It was about control. Because if a CEO could move billions with a sentence, then who really controlled Wall Street? In September 2018, the SEC sued Elon Musk. They wanted massive fines, his removal as Tesla's CEO, and restrictions on his communication. For the first time, Elon Musk looked vulnerable. Tesla's stock plunged. Short sellers celebrated. They believed the end was finally here. Headlines turned brutal. Musk loses control. Tesla CEO in legal trouble. Reckless genius finally caught. Wall Street smelled blood. Privately, Elon Musk was breaking. He later admitted this period was one of the most painful of his life. Long hours, constant pressure, public humiliation. He felt misunderstood. To Elon, the tweet wasn't a scheme, it was optimism. But Wall Street doesn't trade optimism. It trades certainty, and certainty was gone. Short sellers doubled down. They believed Tesla would collapse. Elon would be forced out. The dream would end. But something unexpected happened next. Elon Musk settled. He paid a fine, stepped down as Tesla chairman, accepted oversight on his tweets. Wall Street declared victory. The system had spoken. But the war wasn't over, because Tesla didn't die. It survived, and quietly it began to change. After the settlement, something shifted. Tesla started delivering cars on time. Production stabilized. Demand grew. Model 3 sales exploded. Quarter by quarter, Tesla improved. And for short sellers, this was a nightmare, because every improvement pushed Tesla stock higher. And when a stock rises, short sellers bleed. As Tesla's stock climbed, panic set in. Short sellers rushed to buy shares to escape losses, but their buying pushed the price even higher. This is called a short squeeze, and Tesla's was historic. Billions of dollars vanished from hedge funds. Some funds shut down entirely. Elon Musk watched as the same market that tried to crush him was now fueling his comeback. Wall Street didn't cheer, they adjusted. They always do. Elon Musk had survived the SEC. He had survived Wall Street's bets. He had survived public humiliation. But survival wasn't enough, because now Tesla was winning. And when Wall Street realizes it's wrong, it doesn't apologize. It finds a new way to play. Wall Street has no loyalty, no pride, no memory. It doesn't care who it doubted yesterday, only who it can profit from today. By 2019, then 2020, something unthinkable happened. The same analysts who once called Tesla a fraud began calling it the future. Price targets jumped, institutions piled in. Funds that once shorted Tesla now owned it. And at the center of it all was Elon Musk, no longer fighting for survival, but commanding attention. Wall Street didn't admit it was wrong. It just changed its position. Then came the explosion. Tesla's stock didn't just rise, it multiplied. In a matter of months, it surged beyond anything short sellers had imagined. Every dollar up meant more losses for those who had bet against it. By some estimates, short sellers lost tens of billions of dollars betting Tesla would fail. Hedge funds closed. Reputations collapsed. Careers ended quietly. And Tesla? Tesla entered the S&P 500, the ultimate Wall Street approval. The system that once tried to remove Elon Musk now depended on him. Here's the irony. Elon Musk never wanted to win Wall Street's game. He mocked it, criticized it, fought it openly. Yet by refusing to play by its rules, he changed them. Tesla forced Wall Street to rethink what a car company is, what innovation looks like, and who gets to decide the future. Elon didn't defeat short sellers by arguing with them. He defeated them by outlasting them. This story isn't just about stocks. It's about belief. Short sellers believed the future was predictable. Elon believed the future could be built. Wall Street trusted spreadsheets. Elon trusted engineers. And for once, the future sided with vision over certainty. But make no mistake, this wasn't a fairy tale. Elon Musk paid a price: public humiliation, legal battles, personal strain. Winning didn't come clean. It came costly. Wall Street will always exist. So will short sellers. They play a role. They test companies. They expose lies. But sometimes they bet against the wrong thing. They didn't just bet against a stock. They bet against an idea. And ideas, especially the dangerous ones, don't die easily. Elon Musk never set out to defeat Wall Street. He set out to build the future. Wall Street tried to stop him, failed, and then followed him. This wasn't just a short squeeze. It was a warning to anyone betting against tomorrow. This documentary is created for educational and informational purposes only. If you found this story insightful, please like the video, share it with others, and subscribe to support more documentaries like this.